The US dollar is drowning with fresh economic concerns being thrown into the mix. Do I think this selling pressure is going to stop? We're going to find out in this video. We've got the Fed's preferred measurement of inflation, PCE, this week with a host of other key economic data points. Ken Chigbo back with another E8's market fundamental update. Let's jump straight into this. Guys, we are back with another update and a new week in these beautiful markets. Guys, what did I say in last week's video? I was pessimistic, wasn't I, about that pullback that we're seeing for the dollar. I said I do not see it as sustainable given there are so many concerns mounting on the United States. You know, we've still got the cloud over its head with US and China. We know these talks turn south in a click of the fingers. We know what Trump's like. We've seen it in the past with the previous trade war with US and China in Trump's prior presidency. We have the slowing down of growth. We've seen a contraction. We've seen a drop in consumer spending. We're seeing a drop in consumer confidence. We had the University of Michigan confidence, which we saw the second lowest reading on record. Data is softening in the labor market. And now, obviously, we've seen Moody's, the third major credit rating agency, downgrading the US's precious AAA rating, okay, citing mounting debt concerns. $36 trillion. Debt is growing in the United States, and more potentially to come with Trump's new tax bill. So there's a lot of economic fear around the United States right now, which is prompting that capital flight. People flying out from taking their capital out of the United States and putting it elsewhere, and the dollar is back under pressure. So you can see here, remember I said, being pessimistic with this pullback. Obviously, structure has remained intact, as you've seen, which we'll check that out in a moment. But just look at this weekly, this big bearish engulfing candlestick. As I say, not helped by the fears of Trump with his tax bill, which is expected to add on debt as the concerns highlighted by the credit rating agency Moody's. And then we've seen Trump going at it with tariffs with the EU, upping them to 50%. That's sparking more uncertainty. And it's not only damaging the EU, it damages the United States as well initially. So there's so much fear. And when you look here, again, structure nice and clean with these lower highs, lower lows. We've broken out. We printed that most recent lower high up here with that evening star, validated by that closure below. We were looking for this. And then smashing out to the downside. And now what we're going to do, we've cleared this 99.50 area. There's possible room for a retest here, but you can see my pathway. I've highlighted this to you guys in the previous videos. I'm looking for the price, obviously, to challenge these lows of April down at this 98 region, potentially look for a breakout and retest and go down to that next major zone. Look left, 96.50 is where it's at. In terms of this week, FOMC meeting minutes, just going to echo what Jerome Powell said. These guys are hesitant to want to cut rates for now. They're pushing back on rate cut bets because inflation still remains sticky. On the point of inflation, we do have the Fed's preferred measurement, which is core PCE price index, expect to show that prices remain sticky, 0.1%. For me, either way with that data, I don't think the dollar comes out on top because it's still, even if prices come out higher in terms of the price index, I don't think that's going to support dollar because it's just igniting those fears of stagflation where we're seeing lower growth. We're seeing a number of data points cooling, feeding into that stagflation scenario where growth is slowing down, but prices of goods and services remain high. So that's a sticky situation to be in for the FOMC because they want to bring down prices, but growth is slowing down. They're keeping rates higher. So it's not great. I just don't see it as a winning scenario for the dollar, especially with these tariffs, especially with these debt concerns. It's just so many worries. The list is going on and on and on. GDP, this is the second reading. Remember, we saw the advanced reading, number one, which showed a contraction of minus 0.3%. This is just going to take into consideration any potential revisions. Non-event. FOMC, as I say, non-event. Unemployment claims, just been holding steady for a while. But for me, I think we're going to stick to the sentiment right now, focus on the sentiment, which is dollar downside with all these mounting concerns. And we're going to see that extend to the south, in my opinion. Obviously, this is not financial advice. I just think the roadmap's quite clear here for now for further dollar downside. NZD, we do have the RBNZ rate decision for New Zealand, where they're expected to cut rates, as you can see here, by 25 basis points, taking the rate down to 3.25% from 3.5%. That is largely priced in and expected. What, in terms of the reaction for NZD, how that moves forward in terms of reaction is very much dependent on their tone. Okay, with the press conference, I believe in their statement, they're probably going to be, this is going to be a hawkish cut in the sense of they push back on further rate cut bets for now, just because of the uncertain outlook around tariffs. They want to see how things play out there over this period. Obviously, this 90-day period that US and China have to work out a deal. If they do, we know they can turn south. So I think they'll want to be on hold for now and assess. We know there's been a bit of a slowdown in terms of the economy in New Zealand, but prices still remain a little bit sticky right now, which is another reason why they might just want to cut and just hold for a little while and observe. When you look at NZD, I said to you guys this before, where we have this bullish flag. Okay, big weekly performance, first of all, here, as you can see, big bullish engulfing candlestick, extending to the upside. If you look on a daily, nice breakout of this bull flag. We had a breakout and retest there. Big bullish engulfing candlestick there on Friday with that dollar weakness and set for some further upside pressure. I mean, if we go by the textbook and look at this pole of this flag, that's a 450 pips there or thereabouts, just shy of 500 pips, which could take us all the way up to here, these highs before we started this descent in October 2024. The way the dollar's falling right now and all this uncertainty, it's not impossible that we see these moves. Okay, it's not impossible at all. Obviously, it's not financial advice, just my opinion and trading what we're seeing. But this will be a case of potentially just dealing zone by zone, okay, like this, into that 61.50 area and just look left, right? You can see where those major areas are. And I think we could be on, we're going to see some further potential upside this week, especially if we do get that hawkish cut from the RBNZ this week. Next major zone, as I say, is that will be that psychological 60 area. If we tackle 60, then we're going to be heading into towards 61s and then so on and so forth. Very much dependent. That's going to be very much dependent on dollar sentiment moving forward. So keep an eye on that decision. The Canadian dollar, we do have key growth data for the economy for Canada. GDP expected to pick up to 0.2% after last reading of a contraction of 0.2%. It's been very much more missed than hit in terms of these numbers. We know the Canadian economy has been lagging. We've been speaking about this over sort of recent weeks and months for Canada. We've clearly seen a slowdown. Growth has been dropping. Inflation has remained a bit sticky, which is sort of stagflation scenario. Labor market is worsening. This number in terms of this specifically, I think it could, I wouldn't be surprised if it does come out in line or high, at least higher than the previous. We had a lot of businesses in Canada front loading due to the tariff concerns. Okay, front loading, doing a lot of business exporting, particularly outside of doing business outside of the United States as well. So that may filter through and provide a little bit of boost, just a boost from exports and boosting GDP number overall. When we look at dollar CAD specifically, again, it's taking advantage of this weakness of the dollar. I'm not a massive CAD fan in terms of being a bull of the CAD in general versus other currencies because of the clear economic slowdown and the clear stagflation. When you look last week, those CPI numbers clearly showing sticky prices, which is going to probably keep the Bank of Canada unchanged. You know, want to just observe firstly and try and bring down those prices, similar to FOMC, similar to a number of other major central banks. Dollar CAD here, big bearish golfing candlestick, looking set for further downside. We cleared decent demand, a decent support area around sort of 38, 37.50, as you can see here nicely on the daily. Room for a potential retest of that and making way. There's quite a clear drop potentially. Ahead of 34s, there is a bit of demand here. Can you see at 36 on the nose? So we've got room to run another potential 100 pips. See how we deal with 36 on the nose. If we break out and retest that, it's going to make way for these lows here, which we last saw in September 2024. So the pathway is there. Again, CAD to capitalize on potential dollar downside. Aussie dollar, we do have key inflation data. Now, this comes after last week we had the RBA and they cut rates as expected by 25 basis points, bringing the base rate down to 3.85%. That was priced in. But what was quite dovish was they were debating whether to cut rates by 50 basis points because inflation has come down within their target range. Has seen that cooling. General bit of a slowdown in the Australian economy, not as much as other major economies. It's still holding up relatively well. Labor market's still quite tight. Low unemployment rates generally low. Jobs are still being added to the economy in terms of when you look at the previous trend of employment change. Obviously, they still have the worry of the outlook of the tariffs, depending on how those go between United States and China, as I explained with New Zealand. When you look at Aussie dollar, sorry, just with this CPI number, inflation has remained sticky, as you can see here. It has been sticky for a little while, but it has cooled a little bit. It has cooled a little bit. I don't think we're going to see a massive reaction to this number. I think it'd just be a bit of a non-event, really. Aussie's going to be, specifically when you look at Aussie, it's going to be dictated by dollar trends. If sentiment is against the dollar, of course, which we're seeing that at the moment, Aussie dollar is going to continue to capitalize on that. We've had this awful range when you look at Aussie dollar, but it looks to want to break out, you know, forming a bit of a bullish pennant, similar to New Zealand dollar, where we had that bullish flag. We've got a potential breakout here, which we're observing now, taking out heavy resistance around sort of 64.50, mid 64 region. You can see where the next major zone is. We need to take out 65. There's a lot of supply there. If we end up grinding this down, this region here, we're going to take a run in towards sort of 67s, I believe. If you look on the higher time frame, the weekly, we had this trend line which has been supporting the price initially, preventing further downside from October 2023. See, eventually broke out, retested that in November with that dollar upside that we saw and the Trump trade, and then big downside pressure. And here's a big pullback and potentially another chunky retest coming underway up at 67. So if we clear 65, I think there's going to be a nice strong run in towards sort of 67.00. As I say, element of caution with Aussie dollar versus other peers, but when we're looking at take specifically the dollar as this base case review, there is potential upside again. It does look like this broad dollar underperformance potentially further against its peers this week. So keep that in mind anyway. Just keep on check on that CPI figure from Australia. Now let's take a look at Euro and GBP also versus dollar. There isn't anything major as such to note for Eurozone or GBP, the UK this week, but I wanted to look at those because obviously these pairs obviously have an advantage against the dollar, especially as people are taking their money out of the United States and looking for alternatives. Euro could be a beneficiary of that, and of course GBP. When you look at euro dollar, obviously we were talking about this for a while, expecting that flip side to the Dixie to break out to the north, and we're seeing that. You know, structure has been very clean to the upside with these higher highs, higher lows. Had this flag that we've been looking at for a little while, a nice breakout, had a little bit of a pullback here in towards sort of 112, mid 112 region, and then we had another another flag breakout. I said on the stream, make sure you're watching our streams, by the way, every Wednesday for the New York Open. But I said in the stream, once we break down this 114 region, breakout retest, there'll be a nice clean run in towards 116, in my opinion. If we look at GBP versus dollar, this has been really, really nice to trade. Obviously, last week with UK, just going to pull up the data points here. GBP, as I've said in these previous videos, I've been a massive GBP bull. Okay, last week, sticky inflation. Bank of England needs to keep rates higher for longer. They warned us about this. Services was okay. Retail sales, decent 1.2%. And GBP just outperforming right now versus the dollar. Big breakout, this bull flag here. As you can see, this consolidation breakout. And it's just been consolidation breakout. Consolidation breakout. And now we're at a very key area here at 35.00. When you look left, this was my target area. If we take this out and we get comfortable here and consolidate above, then the next region would be mid 36 region, as you can see here, back in March 2022. But very, very extended right now. And if we go by the textbook and measure this pole, this huge potential flag, this bull flag, you know, potential return to 140. Let's see. But either way, as you can see, guys, I'm still a dollar bear right now. I can't see anything changing yet. Obviously, we'll keep our finger on the pulse. Guys, make sure you're there on Wednesday for our weekly live streams for the New York Open. Have an amazing and blessed week, and I'll catch you on the next one.